I'll keep it on anyway. Paul Carrazzo joins us from Carrazzo Consulting. Of course, it's one of the most sought after segments of the sales. Paul's free tax advice, because it is a serious part of the business. As a buyer, as a breeder, as a vendor or an investor, you need to know what you can and can't do, and there are some rather tricky taxation laws in relation to the Australian Taxation Office, and there's no one who knows it better than Paul. That's right, isn't it, Paul?
Yes, it is, and it's getting trickier too, Bruce.
Well,
yeah,
why
great,
is
great
that?
intro. I think really over a pretty long period, the ATO have never been enamoured by the horse industry. They think we're all in it for fun. Yeah. Which is the furthest thing from the truth, judging by obviously the people here today, etc. So it's a serious industry, and you know, getting approval with the ATO is becoming more of a science than ever, regrettably.
So what is happening right now, though, that is affecting us as in any of those guises?
Yeah, the hottest topics would be, look, I think there'd be about 3 or 4, Bruce. There was a release by the ATO about 2 weeks ago in relation to what we call small, medium enterprises being able to claim losses, and that does affect a lot of players in the horse industry who do make losses in their early stages. And because of the cyclical nature of racing, the seasonal nature, you know, you do get losses from time to time. So these losses, or these companies and trusts, etc., under the microscope now. So that will affect a lot of players in the horse industry, and they'd want to have their affairs up to date, especially apparently their 2009 tax affairs. So what I've been told, but they'd also want to make sure that you know, they are a business for ATO purposes as well.
Is there any?
Look, I'll just permit me to carry on with a couple more. Look. What I've also come across recently was there's a new update to the superannuation laws detailing what is an exotic investment. Now, there's a lot of players in the industry who like or who want to use their superannuation fund to invest in horses. And what that particular new update's confirmed is that, you know, the asset can't be held for what we call personal enjoyment. Yep. And that tends to eliminate racehorses as being a super fund investment. Now, I strictly say racehorses, Bruce. It doesn't necessarily mean stallion shares, and I'll talk about that later on. And many high-income earners at the moment having to lodge tax returns. They have to prepare private rulings to actually get their losses deducted. Now, we spoke about that last year. That was a new change in the law. So our office is certainly flat chat trying to deal with all those private ruling applications, people doing business plans, etc. So that's keeping us very busy. And the ATO is also relentlessly looking at GST returns to make sure people in the industry are doing them properly. And that's been a long-term venture, and it's only escalating as we talk, actually.
Surely there's some good news. Is there something good happening? I mean, you've given us
Bruce, I do want to give some joy.
There.
Yeah, look, there is some good news. There's a couple of items I want to bring to everyone's attention. Firstly, there was a case about a year or so ago to do with GST, and what it confirmed is that you don't necessarily need to be in the business of horse racing to actually register for GST and be able to claim back your GST, and there was a case called Swansea's case which actually confirmed that principle, and that was to do with a company with an investment purpose who wanted to claim GST credits, and they actually won, even though they were originally knocked back. Right. And they won because they had a lot of business characteristics. They were using experts, they had a profit purpose, they were keeping proper records, and they also had a good investment strategy. So they're the sort of things that got them over the line. There's going to be a lot of people in the industry, Bruce, who are just, say, one-off owners of brood mares who want to breed foals, etc., who will be able to register for GST, who thought before a case like that they would not be able to. So that's good to know. And also breeders can now use trusts. They won't be at a disadvantage using trusts. There was actually a change. There was a radical change in the law around June last year when the ATO pronounced that people using trusts could, or primary producers using trusts could not, or their beneficiaries couldn't use what we call income averaging. It's very scientific, I won't go into all of it, but thankfully that rule was overturned in a press release in the middle of December. So that's a welcome relief to people, breeders out there who use trusts, and there are a lot of them, a hell of a lot of them out there, Bruce, and you know, a lot of them do it for appropriate purposes.
You touched on stallion shares and superannuation buying into stallion shares. Have you got a firm view if that's good, bad, or should they or shouldn't?
Well, I do get asked this a hell of a lot, Bruce. You know, like self-managed super funds, there's over $1 million, billions and billions of dollars invested in self-managed super funds. And you know, we often get asked, well, what do you think of racehorses, etc. Well, I've just confirmed what the ATO thinks of racehorses, but stallion shares, I've got a pretty firm view that they should meet what the ATO call the sole purpose test, and they should be an eligible investment within a superannuation fund. And I'll give you just a few reasons. One is that they generate income on a yearly basis. Secondly, they can appreciate in value. Thirdly, you can insure a stallion share. And fourthly, you know, most super funds should have a degree of liquidity, and certainly the stallion shares, you can trade them quickly and get cash for them when you need it. So they're all the things that in my opinion, would lead to you know, super funds being able to invest in stallion shares. And to me, mate, they're no different to holding shares in a super fund. They are got very similar characteristics, and it also helps, Bruce, that if the trustee of the fund, mum and dad, do know a bit about racing, got expertise, that will also help their case with the ATO.
Well, that would help. What about writing off mares and stallion shares?
Well, we haven't gone into that. We didn't speak about it last year, but we get this asked so often, so I better just share a little bit of intelligence about this. Firstly, brood mares can be written down to $1 by the age of 12.
Yep.
That proportionally written off to $1 by the age of 12. As a general rule, stallions can be written off at 25% per annum. And there's going to be a lot of people here, Bruce, who are buying, you know, future stallions who need to know what's going to happen when they go to the breeding barn. Well, this is the position, and also brood mares, if acquired over the age of 12 or over, can be written off to $1 in the year of purchase, and that's not well known, but it should be out there because it's a great tax concession. And I want to reiterate, Bruce, this only applies to taxpayers out there, to industry players who are actually in the business of horse breeding.
What about?
Go on.
No, I was just going to say, what about you touched on a small business tax break, and how does it, if all, apply to racehorses? Well,
small business tax break, that came out during the GFC, the global financial crisis, that was announced by the Rudd government, and we had a lot of questions on this. Regrettably, mate, I can't give you any joy on that.
Okay.
Unless a racehorse is in what we call a standalone horse business, which is very difficult to prove. But unfortunately, trading stock does not meet the concessions. So brood mares and pinhooking stuff does not get you the tax break. So yeah.
And most importantly, when's your next feature? When are you appearing in public, giving us the full list of what we're talking about here?
Well, I had a year off this year at the Magic Millions, so I'm all pumped up for the English talk.
Right.
I do a yearly talk here at Newmarket on June the 21st.
I typed it up for you as well there, yeah.
Thanks, mate. Yeah,
22nd of June.
22nd of June, and we're going to talk about the, actually there's a little change, it's the 21st of June, but,
okay.
So for everyone out there. But yeah, we're going to talk about the hot topics in horse taxation.
Can I claim it on tax if I come along?
Sorry?
Can I claim it on tax if I come along?
You certainly can, Bruce. If you've got a legitimate business, mate, go for it. Yeah, you can certainly claim it on tax, and we're hoping for another big crowd this year because there's a hell of a lot of
absolutely
stuff to share, mate, that's for sure.
Fantastic. Paul, great to see you.
That's you're welcome, Bruce. Thanks very much, mate.
Paul Carrazzo from Carrazzo Consulting, and if you want more information about all we're talking about there, perhaps the best idea is to get along to that seminar, and it's the 21st, not the 22nd. So you can more details come up on TV. And